Short interest today on AMC stock is going through the roof. It's up about 3% from the numbers we seen yesterday. The cost to borrow rates are also up, and AMC stock is up almost 8%, give or take, by the time you guys see this video. We have been going through a gradual ramp up pretty much throughout the entire day today. We're heading into the Fed meeting, which is in about 2 hours. We get the federal funds rate, if it's going to be raised 0.5% or 0.75%. At the same time, we're going to get the summary of economic projections from the FOMC members. That's going to be critically important to the markets. At the same time, 30 minutes after that, we get Fed Jerome Powell that comes out, and he's going to give us the spiel on essentially why they feel a certain way, why they did this. They're going to answer questions from reporters and analysts, and those questions are not going to be easy ones, and they're going to move the markets in very dramatic ways. So we have a lot to talk about, specifically with AMC stock. If we get a bullish reaction from the Fed meeting, AMC stock could go absolutely parabolic, and that is something that I want to clearly express to you guys here in this video. So without any further ado, let's dive into it. Hit that like button, subscribe to the channel, source those comments, questions, or concerns down below in the comment section. Thank you guys for tuning in. If you have not already gotten your free stock, Webull, Moomoo, and Public down below in the description of this video. And if you guys want to come trade with me live in real time, link down below in the pinned comment. It is most certainly a very good opportunity right now to make yourself a lot of money. So getting straight into it, AMC stock up about 8%. Let's go ahead and take a look at the Ortex data, because the short interest is exploding here again today, almost at 23%, 22.94% specifically. Yesterday, we were at 20%. So what is really going on? The AMC short interest is much higher. They don't know where to put the estimated number, but the short interest number is much higher. Even forget the move we're seeing today, 8%. That's not shorts covering. That there's more borrowed shares on the day than return shares. Shorts, they're not covering on AMC stock. They continue to short the stock, and I think they're just getting reported probably bad numbers, or just their estimating platform is bad, or maybe the short interest is really jumping today. Either way, short interest is going up and is up about 3% on the day. Same time, the cost to borrow minimum is now up as well to 11.66%, cost to borrow average of 21.04%, cost to borrow max of 33.01%. So these numbers look very encouraging nonetheless. 100% utilization. Days to cover at 3.76, shares out on loan 195.18 million, free flow out on loan now to almost 38% after sitting at about 30% as of yesterday. So these numbers look very encouraging. Let's look at the option activity, and it pretty much is all calls coming through. As for today, it's been all calls. 1450 strikes, $15 strike, and the 1350 strike coming through for June 17th, as well as the June 24th expirations. Not huge dollar amounts, 30,000, 43,000, 33,000, 26,000, 35,000. Not crazy dollar amounts, but it's definitely a better sign than not, and it is going to help push the stock up as of today. Now, forget any of this. Honestly, forget any of this. If the Fed meeting is very bad, if there is something we don't expect and the Fed surprised the markets to the downside, AMC stock is not going to be likely not going to be the stock that just rallies when the markets crater. Think back to what happened after the last Fed meeting. We rallied 3% the day of the Fed meeting, which is very likely could happen today, and then we fell 5-6% the next day for the Nasdaq, for the S&P after the last Fed meeting, and that all came because of how the markets digested what happened with the Fed and what was announced. So if something like that were to happen again, there's no way AMC stock would be spared, and essentially AMC would fall. Now, for the day, you're seeing the Nasdaq up about 2%. The Russell 2000 up about 1.5%, S&P up 1.15%, and the Dow Jones Industrial Average up 0.67%. Typically, after the S&P and the Nasdaq fall 10% over the course of 3 trading days, you will usually see somewhat of a bullish reaction. Right, somewhat of a slowdown to the sell-off. And the fact that we are actually up so much today, almost 2% on the NASDAQ, actually is slightly bearish to me, just because you're not hitting lower lows heading into the Fed meeting. So it kind of changes the psychology there just a little bit of, you know, the sell-off and what we're seeing. If we were down 2 or 3% heading into the Fed meeting, that would be a much more bullish scenario and give us a much greater chance of actually seeing a bullish reversal. That's just how the markets work. Don't ask me. That's just how they work. If you sell off into the Fed meeting, more than likely going to see a rally. If you rally into the Fed meeting, you're more than likely going to see a sell-off, unless there is something that surprises the markets that is either very good or very bad. Now, the summary of economic growth projections, that's going to be the thing that is really hard to get around, because the last summary of economic growth projections that came out in March were way off. Essentially had GDP at 2.8%, inflation at like 6% by the end of the year, like way off. Those estimates, throw those out the window. They're not going to happen. So the question is the Fed going to try to get its credibility up by being honest with the market, saying, hey, we're going to see GDP plus or minus 0.5% for 2022, or maybe 1% at the maximum? That's not going to be a good thing for the markets. The markets are going to say, yeah, we expected that, but to now hear the Fed saying that, not good. Or to hear the Fed say potentially 7% inflation by the end of the year, that's kind of what the markets expect, or maybe even higher inflation than that. But it's still going to be one of those situations where it's just bad news overall, and the Fed would be admitting essentially that they are failing and that they will have to raise rates at a more aggressive pace, and even maybe give us hints that if a recession comes, they're still going to have to raise rates regardless. And that's going to be something that would spook the markets the most, and I think that would be a reason why the markets could continue to fall. We'll see if that narrative actually plays out, and it's really going to come down to Fed Jerome Powell, what he says, what kind of tone he uses, potentially how he answers questions. That's going to dictate what happens with the overall market. But either way, it looks like a lose-lose for the markets, for the Fed. As of right now, there is the case to be made, though. The markets have fallen 10% over the last 3 or 4 trading days. You might just get a rally off of that because we have fallen so much. And the NASDAQ is down still 30% year to date. So there is that case to be made. We've already seen a lot of pain. Potentially could see a bullish reversal off of that. So it really could go either way. I'm expecting a bearish reaction, especially after this rally that we're seeing heading into the Fed meeting. And we are expected to get the biggest hike in 28 years, which is going to be the 3/4 of a percentage point hike, the 0.75 basis point rate hikes. If we get that, you know, it's hard to say if it's actually priced into the markets. A lot of people say they expect it, but if you look at the federal funds rate, well, basically Fed funds monitor tool, you could see that last week's probability of getting a 75 basis point rate hike was 3.9%. It's only been 3 trading days since Friday, and now we're at a 97.5% probability of getting a 0.5% rate hike. I don't think 3 days is enough time for the markets to fully price in, you know, a 50 basis point rate hike to a 75 basis point rate hike. I just don't think it is. So I think you could get a little bit of that negativity just off of that. The markets have not had enough time to fully price this in. And you're also seeing 6.3% of people expect to see a 1% rate hike. Just absolutely wild. So there is that. Let's see if we can pull up retail sales numbers. And that doesn't look good. Home builder sentiment drops to lowest level in 2 years as housing demand slows. Retail sales posted unexpected 0.3% decline in May as inflation hampers consumers. Retail and food service spending posted a surprise of 0.3% decline in May, below the estimate for a 0.1% increase. Spending at gas stations led but was offset by declines elsewhere, according to numbers that are not adjusted for inflation. And that's the thing. With gas prices up so much, it's taking away money that people would normally spend at other places. So yeah, it doesn't surprise me retail sales were down 0.3%. The markets are really shrugging that off. The Fed is the main catalyst for right now. Look at this headline. Millionaires fear the Fed can't tame inflation and stave off recession. Obviously, they cannot stave off a recession. There's no way around that. But the timing on when a recession is actually going to happen is up in the air, and we might get a little bit more clarity on when we can expect to see that recession. Now, the max paid for AMC stock by the end of the week is $16 per share. We are currently trading at about $13 per share, up 8.39%. And how AMC stock could essentially go crazy if the markets do have a bullish reaction to the Fed is because of the calls that are out of the money and the puts that are in the money. So you are seeing some calls going into the money today of about 20,000. That would be about 2 million shares that had to be hedged for so far for the day by the market makers. At the same time, you're seeing about I believe it's about 5,000 puts that are running out of the money. So that is about, give or take, 50,000 shares that would have to be hedged for by the market maker. So you are seeing a decent amount of this, 500,000 shares that had to be that would have to be hedged and bought by the market makers. So that's about 2.5 million shares so far for the day estimated that the market makers had to go out and buy, and you're seeing an 8.5% rally based off of that so far, with volume for the day at about 17, almost 18 million. So if you do see a big move, you're going to see a lot of calls go into the money, a lot of puts run out of the money, and that is going to lead to a lot of potential buying power. We're still in this range, so don't get too carried away with that. If we break out above 1454, this 50-day moving average, that's going to be very, very bullish as well. We're probably going to break out the 100-day moving average at $16.24 per share, make our way up to the 200-day moving average, just like what happened after that Fed meeting back in March. Broke out above the 50, broke out above the 100, and then went to the 200, got rejected, and then came down, and the rest is history from there. The RSI is at 49.08, so pretty neutral. The MACD is also pretty neutral as well. So it's good to see an 8% day, but we're going to have to wait and see what happens with the Fed. That's going to be the main entree for the day. That's going to dictate what happens with AMC, what happens with our stock market. So hit the like button, subscribe to the channel if you guys found value out of this video. Get your free stocks down below in the description with Weeble, Moomoo, and Public. And if you guys want to come trade with me live in real time, link down below in the pinned comment. Thank you guys for watching, and I will see you in the next one.